Capital, everyone. This is Raj. Let's quickly do a review on Honda India Power Products. So Honda India is a part of the MNC Honda Limited, which is a motorcycle company, Japanese company, and they make engines, gensets, generators, water pumps, lawn mowers, brush cutters, tillers. So these are the types of products that they make. Let me just quickly show you here. So they have tillers, brush cutters, water pumps, lawn mowers, generators. So generators gets them around 60 to 65% of the revenue. Then you have general purpose engines. So Honda products are on the expensive side. However, they are very high quality. So that is the reason why a lot of companies would prefer buying Honda gensets or Honda engines, right? Let's look at their revenue mix on Tijori. So if you see the product wise, 62% revenues come from generators, 15% come from engines, 10% from water pumps, and 12% from the others. So they have a 50-50 mix in terms of their revenue breakup on geographically. So rest of the world gets 50%, India gets 50%. And yeah, that's about it. Let's quickly check a few other important stuff. So 1365 crores. Stock is trading at a PE of 19, which is decently valued. ROC is in the range of 11, ROE is 8.9. So these metrics are on the lower side, right? So we'll try and figure out why that is happening. They give out dividends, so pretty decent dividend yield. Promoter is holding maximum stake, so that is good. So Honda, our company is the motor company, is the original, only promoter which is holding all the stake in the company. There is no pledge. Obviously, MNCs usually don't pledge their shares. Apart from that, they have decent sales growth, 7% in the past 3 years, right? And what else? Just a second, guys. EV to EBITDA is 10.6. So EV to EBITDA is actually, it's trading at the lowest EV to EBITDA when we come to financials on Tijori. And we'll look at the ratios. Just a second, guys. I'll show you the ratios here. Yeah. So EV EBITDA, it's trading at 9.6. It's trading at its lowest levels of EV to EBITDA, lowest levels of price to book. Right. So why are we looking at this? Couple of things I'll show you. Just a second. So if you look at the PE, the median PE is around 22. Stock is trading at a PE of around 19, right? So, with earnings coming at a higher clip, I'm expecting that that there is a re-rating that can happen in this stock. So why I'm thinking a re-rating is possible? We'll look at the profit and loss. So they've clocked in highest profits ever. If you see here, they have the highest EPS as well currently. The sales are also at on the highest side. Now if you look closely, their sales actually didn't get affected by Corona. So they did higher sales in 2020, much higher in 2021, and trailing 12 months sales are much higher. The only thing that has happened is that their margins have gotten impacted. So we all know that there is a huge inflation in terms of commodity prices, logistics, supply chain. So that is one of the reasons why most companies are facing margin pressures. But once these things normalize, we'll see margins coming back to normal. So now if we come here and just look at the average, just a second, guys. Right, so the average net profit margin of this company is around 7. Okay, 5-year average is 7, 3-year average is 6.5. So even if it reaches 6.5, it has the opportunity to go up by 300 basis points. ROC can also reach till 14, 15. Return on equity can also go higher. So there is good chances of, the metrics becoming better. And with the profitability coming at a higher clip, and then inflation, commodity inflation subsiding, with the logistics and supply chain issues going away, we can expect the margins to normalize. There is no debt, on the company. That's also an excellent thing, right? Let's go on the balance sheet. No dilution in equity, no borrowings as such. They have 135 crores of cash on the book. So, if they want to do any capex in the future, they have ample cash on the books that they can use. All right, there's not much capex here, so there's nothing much that is happening in terms of new factory or new capex. They did capex earlier, between 2010 and 2014. They pretty much doubled, that the assets pretty much doubled in that period, right? So even the profitability went up from 13 to 50, right? So let's look at the cash flow. They've generated great cash flows this year, 152 crores from operations, which is pretty good. So Usha International was an earlier partner, which sort of the partnership doesn't exist anymore. So right now Honda Motor Company is the only promoter of the company. There are a decent number of DIIs in this company. In fact, they've increased their stake over a period of time, since COVID. And public holds around 17%, of the stock, right? So the shareholding pattern is pretty robust, pretty good. I like to see this kind of shareholding pattern where promoter is holding maximum, stake in the company. One has to also understand from this perspective, guys, that if the promoter is holding 70, 75%, 60, 70% of the company, they usually are not going to do any hanky-panky in the company, because they own the maximum stake, and if the valuations go down, it will hurt them as well, right? So it usually happens with promoters who don't have much skin in the game. Then they will sort of pounce on the opportunity to do some sort of get into some sort of financial shenanigans in the company. So interesting thing to look after. Now, why am I bullish on this company? So a couple of things. We see that the economic activity has picked up, and GDP numbers are coming at a higher clip. So with economic activity picking up, and it is pretty evident from the sales numbers also. If you see the sales number as compared to 2020, their sales are already up by 150 crores, like 200 crores. So it's almost up by 30% as compared to March 2020. These numbers are encouraging. These numbers tell you that the economic activity is pretty robust, and there is demand. So if their margins become better, if their margins go back to 11, 12%, even if the sales is only rising by 10, 15%, we can expect higher profits for this company. Oh. Now one more thing, if you see last year's profits were 49 crores. So this year alone, they've done 36 crores in the last 2 quarters. So assuming they do another 36 crores, so that will be 72 crores. So 72 minus 49 is 23 crores. So 23 is roughly 46% of last year's profit. So if profits keep coming at a higher clip, sales keep rising and profits keep coming at a higher clip, we can expect the stock to go much higher. Now if a re-rating happens in the stock, if the stock reaches a PE of 23, 24, so at the current EPS of 71 and PE of 22, we can expect the stock to reach at least 1600 rupees. So this is what I'm expecting, in terms of my targets. So I've made a small position in this company. I'll be looking to buy more, once it corrects a little bit. Now that the markets are a little weak, we can get these stock at a cheaper rate. Let's quickly go over the technical charts. So if we see that the 50-day moving average is trending upwards, 200 days trending upwards, and what has happened basically, the stock earlier was trading within this range. If you see, the stock was between October 16 till August 18, the stock was trading between 1300 and 1700, 1300 and 1700, post which the stock fell. So post that, the stock sort of broke down and went down by 45%. So what's happening right now essentially is that every time the stock reaches this level, there are people who are stuck here who are exiting. People who are stuck in this level are exiting, right? But what's interesting here is, guys, that if you see now when the stock is correcting, it is correcting on extremely low volume and it is going up on extremely high volume. So we can take a calculated bet that, there is buying happening, and this buying can sustain and push the prices to a higher level. So what am I looking at in terms of entry point? So I have started buying here between 1350 and 1300, and I'll be looking to add more even if it falls further. So basically, since the markets are weak right now, chances are that the stock might fall 10-15%. But looking at the way the markets have corrected, so recently the small cap mid cap index have fallen by 13-14%. So even this stock has fallen by 13-14%. So if the market slip further by 5-7%, chances are that this stock can also go down. However, my guess is that this stock will continue to consolidate between 1100 and 1500 if the market continues to remain weak. And if the earnings keep coming at a higher clip, then the chances of this stock going higher becomes much better, right? So if the earnings keep coming at a higher clip, the PE will also go down, and then it will become more attractive, valuation wise it will become more attractive. Then it's only a time when basically when the re-rating happens, or when sort of institutions start buying this and push the prices higher. So what are we looking at? We are basically looking to accumulate this stock. I've bought some. I'm looking to accumulate this stock. If it falls further, I'll be looking to accumulate more. What are the targets? So as I said earlier, if the stock re-rates, up to 23-24 PE at a EPS of 71, we can expect 1650-1700 level. So if we look at the earlier highs, the earlier highs are around 1700 level. So a good 25-30% uptick is possible in this stock. Also, if we look at the profitability here, the profitability is the highest in the past. In the recorded history of this company since 2010, they've recorded the highest profit. And as compared to last year also, the profits are much higher. The profits are high more than 50%. So I'm expecting at least 25-30% uptick in this stock, at least in 2 quarters. December is a seasonal month, so I'm not expecting much to happen this month, but most probably by Feb, March, we can expect good movement coming into the markets. So this was the analysis, guys. Quick disclaimer, this is not a buy sell recommendation. It's an educational video. Thanks a lot for watching.